right. Thank you so much for joining us on this wonderful edition of Behind the Markets. In case you are just tuning in, this, of course, is Behind the Markets today, the 6th of March 2023. In case, of course, you are able to, you can actually reach us out on our social media platform, Twitter, Facebook, as well as Instagram, as we are live on that platform as well, just to give you, every aspect around ideally what's happening behind the markets this wonderful interesting episode of it today. All right, so Mr. Mtwale, how's the morning going so far?
Good morning to you, Vernon. It's what I call holiday week. This is where, when you've just come from your holiday season, you've battled with the previous year, the previous what's it, holiday season now, or you've battled with January, sorry, and then you went into Valentine's Day, where, or what we call the Valentine's massacre for many brothers out there. And now we get these holidays, which actually come about and they now come and help us enjoy our lives. So this today is holiday season. This is about this week where it is International Women's Day this week, and it's going to be Youth Day. I think Youth Day, if I'm correct, that should be one that'll probably have a weekend attached to it or something of the like. We don't know. We used to get those extra ones under our previous administration. We don't know. But you remember that our current president loves the youth, so I doubt he's just going to leave this one hanging. But anyway, pardon?
Absolutely. I think back then people would actually think, I mean, if it's a holiday, we'll probably have an extension of at least a day or two just to make people have and enjoy more of that holiday. But it seems we're having less holidays.
Yeah, it is. But anyway, for today's Behind the Markets, we're going to be going through the market roundup. I'm going to be talking about regional and global inflation. Also, some news coming out of Kenya, where we're talking about high net worth individuals rotating their money back into the Kenyan market. And finally, we're going to be talking about our Mindset Monday combo. Today, we're going to be talking about the mental diet. I want to talk to you people about having the right mental diet. And also, we're going to be talking about what I call signals versus noise. Okay, how to work on noise versus signal. So these two, it's like a 2-for-1 today on Mindset Monday, and we'll be back on that after the break. I know we got a break for 60 at 60. And then on the other side of that, we're going to start with our market roundup, regional inflation, and we're going to get into some readings on some data coming out of Kenya. So see you on the other side, Brennan.
All right.
Behind the Markets on Money FM.
All right, broke in, of course, there for a quick, 60 at 60 headlines. But of course, we're back with just ideally behind the markets today.
Thank you very much. Thank you very much, Vernon. Let's get down into a little bit of the data for today, especially coming out of last weekend. Now, breaking into last weekend, we did see the markets close at the continuous run of the Kwacha losing its value and losing its strength. And continuously down that route. Unfortunately, it has been a tough session for our currency, down to, I think we're now up to 105 days. I'm just trying to make sure I get that correct. 105 days of currency loss. This is officially more than halfway from our previous currency loss and where we're standing. Sorry about that. Now I'm going through in terms of, sorry about that. Let me just correct that part. It's 105. Yeah, sorry, it's 105 days. Sorry, I had the wrong one written there. 105 days. Kwacha did close yesterday at 2000. Sorry, I'm just playing with you. 2004 20.04, so 2004. And to wonder what was happening in 2004, Vernon, I think that's your time of your amayos and those things. So that's I think you were very young then. I think you were very young back in the years of 2004. Trying to listen to what album I bought. I remember 2004. The CD that I bought that year was Joss Stone's Introducing Joss Stone. That was the music that I was listening to then, and I just come out of Ludacris. Ludacris was like a big artist back then, so that was my music back then, back in 2004. Kwacha closed at 20.46, up. Dollar is up 0.348. 0.34 from yesterday. On the week, it was down 1.2%, and on the month, down 4.55%. You can see that the dollar loss and the oil price movements are very much the same. Oil moved 4.78, Kwacha moved 4.55. So you can see it's all the FX rate that's doing this year to date. The USD is year to date, we're down 10.77% in terms of our currency with 105 days consecutive loss. And we are continuously having this baked in. So it's going to have to take a huge disruptive event because the Kwacha has built continuous loss momentum. This is where one really gets concerned. Remember that the dollar and the Kwacha was currently at 15.9, 15.4 actually, when this whole thing started. When these 102 days really started moving, we got to that point where it was moving consistently. So I think the worry now is what it's going to take to disrupt this. Is going to have to be a mega movement. That's going to have to shift the market heavily. Now, you're also looking at the Rand. The Rand was down. Rand was up 0.84% due to a little bit of strength in the South African Rand. 2.84% down to the week, and year-to-date 3.442%. That does affect, obviously, our inflation reads as well, but the Rand is only having less of a winning streak. Now, looking at the bond market, we did see that bonds were down. Bonds were up 0.08% on Friday. Bonds in Kwacha were up 0.08% on Friday versus the up 5.21% year to date, so just beating inflation a little bit. But we're seeing that on the US dollar bond side, we did see them also up 0.08% and down 0.479. 0.4 down 0.479 year to date, with an interest rate that is currently sitting at 24.06%. So out of the 23s and now dunking into the 24s, meaning that interest rates are actually picking up a little bit. Unfortunately, we did have a spike towards the end. 47 days of the bond index moving up positively. Now for the rest of the market, we did see that copper took a slump down by 0.35%, and we did see oil now trading at about 86, up 1.21%. Obviously on expectations of China buying more oil, and gold is up 1.21%. Expectations to see what the Federal Reserve is continuously doing. We are also looking now at even our crypto markets. We did see Bitcoin take a bit of a dunk, down 4.42% on Friday, and Ethereum up 0.34% in Kwacha on Friday, with gold up 1.55%. Now, if you're looking at where portfolios are sitting in general, we did see also a rebound in the stock market. That was a very good read over the weekend, thanks to Airtel results. We did see Airtel push the index up, and we're almost out of the loss of the market altogether. Airtel results, remember last time we did see Airtel results come in stronger than industry. Industry expectations were that we're supposed to see negative growth, but we did end up seeing a 0.02% movement up in the index, which shot year-to-date losses down down to 11.2%. We also saw Bata shares going up by 0.78%. It is earnings season, so expect quite a bit of movement in the stock market relative to this period. But after about April, you should see it relatively calm down. This is if we don't reach a debt negotiation. Now, we had our president visiting in Qatar for the LDC, the Least Developed Countries Conference. But and I can't help but say this, with so much drama in the LDC, it's kind of hard being H to the double E. Our president is actually trying to you're too young to understand that quote. I actually just realized when I said that. You're way too young to understand that quote. Because anybody my age understands from the sentence with so much drama in the LDC where that comes from. But yes, the Least Developed Conference, and he did cite, look, we have to try and figure out how to get capital at a right price to Africa. That was his strong part of his message. As he was saying, how can capital be cheap in all the developed countries, but in the developing countries, it becomes expensive. The money required for developing becomes expensive. The capital we need for infrastructure, where in the developed world, where they have so much access to capital and excess capital, wherein for they're getting it so cheap, we're getting it quite expensive, and that's actually keeping us back, unfortunately. So I think you did pick that up, and even trade deals. Of course, China did actually get out of least developed nation status into top developing nation status, if not developed nation status, because instead of asking for capital, China asked for trade. And we used that trade position to then accumulate money. The problem with Africans is if we get trade deals, we then start buying their cars, living their lifestyles, balling out of control, and then we wonder how come these people won't borrow us money. I don't know. Maybe because you're not using the money that you're actually making from them. So the Chinese had discipline. That is one thing us Africans need to try and work on, is our levels of discipline. Whenever we get any good trade deals, to store that money up and utilize it for development rather than using it to try and cure poverty. But one other quote I think I'll get from the president from his speech at the LDC was, he said, we must work on building wealth, and building wealth is what will curb poverty. I'm going to take a moment to actually clap for that one. I don't know if it's lip service or if it's actual, but I'm just going to pretend it's actual for now and hope that we're going to try and execute on that. No, because that is the narrative we need to try and switch from. Okay, we need to stop asking for poverty alleviation and start looking for wealth creation opportunities, and to utilize the wealth created in our nation to then alleviate poverty. Okay, because the reality, Vernon, is this: the opposite of poor is rich or wealthy. Okay, the opposite of poor is wealthy. So if you make people wealthy, your nation stops being poor. That's actually the easiest way to fix it. I'm not saying it's easy. In fact, let me not say easy. It's the simplest way, because there's a difference between simple and easy. Simple means clear. Yeah. Easy means effortless. So it is not easy, but it is simple. And this is what China did. They focused on how many people can we make rich. So therefore, that ended up making less people poor, and therefore they got out of poverty. So there's no magic formula that you're all looking for when it's just a very simple thing. I'm actually reading a book called what's it called? Eccentric Thoughts. And in chapter 1, the man talks about a very important concept. The lesson I got from chapter 1 was, do not unnecessarily complicate your life. Like, don't make things that are simple and straightforward unnecessarily complicated. Okay, and I think this is what we do whenever we address poverty. So that's part of the speech from the president about wealth creation should be not just a conversation and a speech point. It should actually be policy. Okay, and it shouldn't just be policy at government level. It should be policy and practice at individual level. Everybody. And I know this sounds rough because whenever we're trained to be Christians, we're trained to believe that Christianity is about poverty. I don't know who told you that. I don't know where we got this glorification of poverty from, but I am not sure where we got that mindset from. But what we need to start understanding is a lot of us not become wealth loving, but we need to gear our minds towards making sure that we build our individual stakes of wealth. We start to educate ourselves in how to build wealth. We start to practice the things we are educated in and how to build wealth. And then once we have built wealth, we can be a lot more giving to one another. The problem, I think, in Zambia and most Black societies is we attempt to share poverty. That's the problem. We want to share poverty instead of building wealth in a parallel fashion and then utilizing that to uplift those that may not have the best, the easiest outcome. So anyway, that's just something I saw from his LDC speech, just to supplement some of this. And because he's talking about right-priced capital, and I was linking that towards the stock market, it is going to be a conversation about when we see a deal coming in from the developed world, when we see a deal coming in, we're gonna have to now start making when we see a deal coming in, we're gonna have to start figuring out if that debt deal comes in, what's that going to do to our stock market, and what that'll mean in terms of cash, in terms of money flowing in, and also when the developed world stops hiking interest rates and maybe starts slowing down on that. The other big piece of news last week, Vernon, and I'm going to talk about it now, is obviously part of the conversation we dealt with last week regarding the big news of the dual carriageway. Okay, now I'm not going to speak specifically to the news, the actual road itself being launched. I'm going to speak to the policy, okay, because there's something that's much more important, and I'm going to talk about this later, about following policy and not just pop news here. But there's an actual important mindset here that we need to try and look at. And why I'm saying this is, here's my statement for what I read from there. And I got this from the statement that they had released. It said, under the PPP model, I'm going to put this for infrastructure, not just for the road, the government will not spend any money on providing or provide any sovereign guarantee for the construction and maintenance of PPP related infrastructure. And this and they will receive a share of the generated revenue and the applicable taxes of the whole concession period. Now, there's a lot of riffraff going around. This is the information we have. Okay, I know there's conversations about NAPSA and workers' compensation, all those things. Unfortunately, we're still looking for confirmation on that information. But let's look at the information we have confirmed. Now, what this tells me is, one, expect less borrowing from the government. That's the main piece of news I want everyone to gather. Expect less domestic borrowing, because now they're taking out a part of their budget, which often used to consist of 10% of the primary budget of the government. So the government used to have to borrow a lot to fill up the gaps, because the primary budget, which is when you remove debt, okay, the debt repayment and what they're actually primarily spending on for operational or functional pieces of the government, that used to consume about 20 to 15% infrastructure development. Now, infrastructure development is only 4% of the budget. And what this is signaling from the government is that they're opting to try and figure out how to finance infrastructure without spending money, because that is a very categorical statement. The government will not spend any money or provide any sovereign guarantee for the construction and the maintenance of the roads. And what they simply mean with PPP, which is public-private partnership, is this. You build a road, you own it, okay? You own it for a stretch, and then what you do is you finance, you build a road, you take ownership of it, the toll fees that come out of it, you collect most of them, you pay part of it to the government, and whatever revenue you generate from there, we also tax you on it. So the government will be receiving money and spending less money. And then what also happens when road development is done this way is, because it's a for-profit thing and there's a business mark next to it, there's going to be a lot of focus on operating it like a business, and therefore investing as little as possible, getting as much return out of it as possible. So therefore it's done more efficiently. Now, I know there's other things like making sure 20% of the outsourcing is given to locals, though I think that number should be 35%, if not 40% of this 35%. But then again, they said 20% should be outsourced to local. So that's some of the activities that are there. So they bring in their infrastructure, make their money, extract their profits that they make from it, and whoever financed part of it, that's a different story here, there. My main thing I want us to get out of this, especially if you're a bond investor or a stock investor, it is part of the fiscal reforms that the government is playing out of it. Okay, so whether it's bridge infrastructure, whether it's power infrastructure. Now, I want to show you a quick chart, by the way, on recent expenditures in power, in not power, in transportation infrastructure in the country, and how the map has been over a long period of time. Because I think what most people need to see, Vernon, is what does the data say? If you want to be guided on things like this, what does the data start by saying? And so if you kind of take a look at this historic graph, what we've seen here is we see a lot of the data that shows that around 2011 we had about 3 billion kwacha of expenditure, and we saw steady rises in transport infrastructure budget in billions of kwacha, and we saw steady rising that pushed us all the way up to 9, dropped in 2019, and in 2020 our transport infrastructure went up to about 12.38 billion. And since then, we've actually been seeing this number collapsing. As you can see, it's down to 6.78 in the 2021 budget, 5.97 in the 2022 budget, and 5.32. And the government is looking to push it lower and lower. So you can see there's a continuity of a policy here, one that started with a strain in 2021. You can see the change in direction. We've had three consecutive years of the budget for infrastructure actually coming down in kwacha terms. And part of this, yes, there was a freeze in lending activity due to the fact that we're in default. But then the second part from 2022 to 2023 is driven by the fact that this is now a government policy to try and shut down any excessive lending activity or any excessive spending activity in the infrastructure sector. So you can see that our government is actually allocating less and less to it so it can do more social, it can do more empowerment, and it can do more decentralized spending, as opposed to funneling a lot of money here and opting to bring in an investor community to then finance the activities that are going to be taking place. So that is the main thing, Vernon, that I wanted to really keep in mind here, that as a country, we should now be prepping ourselves, those of you who've got fixed income portfolios, for the fact that the moment you get this debt situation out of your hands, you're then going to end up seeing your interest rates start coming down, because these are the underlying fiscal reforms that your government has done. In other words, Vernon, they're spending less money. Okay, when they're spending less money or needing to borrow less money, because these are the capital intensive projects that they tend to often borrow for. So when they borrow less money from the domestic sector, then they put less pressure on their interest rates, are then set to come down, and then you see a lot of winding down of that. So that's one of the big pieces of news from last week, which should speak to a model that has now been put into perspective. So PPP is no longer a policy which is on paper, it's actually a policy in practice now. So this is the first practice we're seeing of the PPP model, and the extension of the PPP model to the other mega infrastructure zones, things like energy infrastructure. And you can even see things for, like, they're trying to bring in solar. Okay, all these solar investors, they're not trying to borrow for solar anymore or borrow for grid expansion. They're trying to get equity investment for grid expansion so this is part of what we need to be focusing on as a country this is what we need to be focusing on. Now going into another part, and I think I just want to quickly just jump onto a question that we have here before we move on. And something that I think Gift Kaoma is saying, to own something that we have to be willing to spend on. So I don't agree with you supporting the idea of leasing a road for 22 years. And do you really believe whatever information decided to share to the public? Because as far as I know, the government has never been 100% transparent. And if you're comfortable with us not owning a road, then be comfortable with us not owning anything. Sure. That is not a conversation for me to have, simply because it's not something I'm really into. My main conversation point is to try and guide people on where their money is going to be made. And if that offends you, tough luck. I'm not a social activist. I'm a financial advisor. So that's not a financial advisory question. So have a wonderful day. So now let's move to the next part of our conversation here. And yes, by the way, this is a model that's practiced in many other countries. So sure, I'm sure it's something that might get on people's nerves, but sure. Tough luck trying to have a conversation with the guy who owns the microphone right now. Right. Now let's move into the next. Let's move into our next item here, which is the potential, which I wanted to talk about in terms of the inflation data that's actually coming out in the global economy. Now, one of the main news I wanted to share when it comes to inflation data is that we are actually seeing how do I put it this way? We are actually seeing inflation around Africa being relatively high. Here's a quick chart of other inflation that we're seeing in terms of our neighboring countries. And this has been a big concern for everyone. This is the top 20 inflation reads that came out of Africa. Zambia is currently at 9.6%. The top 20 inflation rates in Africa are, as we said, Zimbabwe 92.3%. Zimbabwe has finally dropped out of the 100 for the first time since April. Zimbabwe has finally dropped for the first time since April. So 92.3%. I don't even know how these guys are surviving right now. But anyway, that's life. Sudan, 83.6%. Ghana, 53.6%. Inflation year-on-year read as of January-February data. Sierra Leone, 38. So you can see these numbers are relatively high. And it's mainly because fertilizer, fuel, and well, for them, it's things such as fertilizer, fuel, and the imported food costs that are coming up. So these things are ripping through Africa. And I know most people don't like the terminology that it is regional because we used to get lied to about things being regional. But the reality is, that is the case. It is regional. Just to also backtrack, by the way, I know there's something I may have missed here. But I just wanted everyone to understand, because I think there's a question that is to be raised. When it comes to the leasing of roads, I hope you know that even NAPSA has already been engaging in this before. This has been a policy that's been in play for quite some time, the leasing of roads, where you build a road and then you're able to collect the toll fees of it. That's actually been in play for some time, and that's why you see there's 4 billion kwacha worth of infrastructure assets under NAPSA's portfolio. So it's already existing, by the way. You're already investing in infrastructure here in Zambia through your NAPSA budget. I just wanted everyone to actually also know that. So it's already a common thing that's been happening here for a little bit of time. I think everyone's just catching on too late because it was a big project and also because we don't read on regular stuff. But this has been going on for a bit of time in Zambia, and it started in the previous administration. It's not this current administration who even started it. They're just leaning more on it. But it actually started in the previous one, and PPP talks started as early as budget 2012. This is when we started working on trying to now remodel our infrastructure towards a PPP-based one. But of course, we deviated from it. But it started when there was strain on the budget, and they started trying to get as many institutions to try and do that. So domestically, there are institutions who already hold infrastructure as an asset. In fact, there was even a bond raised for it recently, a long time ago, that did it. So I just wanted to add that to it. Now let's get back to inflation data. As I said, African inflation data is relatively high. Now, some of the data that we're also seeing as well, Vernon, which is positive for me, which we think we can be a little bit more positive about, is inflation data to do with global food prices. So global food inflation is finally starting to come downwards in terms of the cost of food items or finished products in terms of food. Now, we've got the FAOA Food Inflation Index, which last month, and that came out recently, last month showed some disinflation. We saw a 0.6% drop in food prices from the last month, and year-on-year inflation versus last year, we actually have seen food prices drop about 8% globally. So we are finally starting to see food prices starting to come down. So I think a lot of the stress is down, except for sugar. Last month, we saw sugar prices go up by 6.93%, and we saw year-on-year sugar prices go up by 12.99%. That's good for companies like Zambia Sugar, by the way, because remember that they're trying to export sugar. So these are signs and shortages. What we're seeing from the rest of the industry, meat prices globally were down 0.12% yesterday and down 1.69%. Month on month, and down 1.69% year on year. Dairy prices are down 2.7% month on month and down 7.22%. Cereal prices were down 0.12% month on month and up 1.41% year on year. Oils, and this is a very important one because I know we've been having an argument about cooking oils, but edible oils are down 3.24% in dollars year on year and a month on month, and down 32.64% year on year. So we actually are seeing that even cooking oil, I know there's a debate about the prices going up and the cost of things going up, but there is a little bit of a change in the data here. And then the other thing I wanted to add to this, Vernon, by the way, is fertilizer or beverage costs. Things like imported teas. Tea went up by 5.23% month on month in this recent read, but it's down 8.2% year on year. And what we're seeing also from the fertilizer industry is fertilizer in general, the fertilizer index, according to the World Bank, is down 5.61% and down 14.5. So I think the expectation that this is actually eating into a lot of our costs, I think, is a bit unfounded from this point onwards. So we're seeing a lot more drop in value. We did see at the end of the last quarter prices of fertilizer staying elevated. Now, Vernon, I must say, the cost of these things are still elevated. They're still high. Okay, so I think that's what many people need to recognize. The cost of these things are still high, but we need to try and take a look at the costs coming down. I think that's they are starting to come down. So at least it should be a signal for the future stress on the currency, that we are seeing the costs of these things globally starting to come down. Though one of the problems I think Zambia is facing is logistics costs of these things. Even things like oil, when the prices are coming down, unfortunately getting the finished product to Zambia still becomes relatively expensive. So getting things to us, the problems I think is coming from the supply chains to Zambia. Getting things to us is actually adding some costs to the system. But the raw commodity costs of these things are far lower. And even other raw commodities, things like timber, those prices have dropped. And other non-food related things like grain, for example, is up 5% year on year in dollars, but down 0.64% on the month. So that's quite a bit of data that we're picking up from the World Bank Food Inflation Index and also the FAO Global Inflation Index. I'll publish some of that later for people to be able to see. Finally, Vernon, when it comes to African data, we did see Kenya got a story out of the Knight Frank Wealth Report, which says the 3,300 US dollar millionaires in Kenya sold off part of their offshore portfolio, reducing their exposure to offshore investments from 18% of their portfolios to 11%, choosing to repatriate their money back into local properties, which is local real estate, which now they're holding 40% of their portfolio in, and local government bonds. Kenyan investors who are part of the high net worth individuals are now buying local government bonds as part of their wealth portfolio in order to escape the losses that they've been experiencing in Europe. With EU losing 17.5% last year, Asian markets losing 7%, Middle East losing 7.3%, the Americas down 10%, and Australasia down 7.7%, versus Africa, the African markets, which only lost 5%. This is according to the Knight Frank Wealth Report, and this is the part on Kenya. So part of this is actually showing us that those of us, I know I get this question a lot about trying to invest abroad. This is still not a good time. People are exiting those markets. And the problem with most people will tell you, buy when people are selling. The problem with the Western markets right now, or the developed markets right now, let me not say Western, even Northern. So let me say the Northern markets right now, is that they're going through a global restructuring. So there are a few things I want us to pay attention to when it comes to the future, when it comes to what's happening in the global economy. Firstly, we don't know how long the Russia-Ukraine war is going to last. That's problem number one. We don't know how long this Russia-Ukraine war is going to persist. Number two, I think we don't understand is geoeconomic, geosynchronous growth has turned into geoeconomic competition. In other words, where these countries were operating as one big supply chain, now they're competing against each other. France wants to make electric car batteries, while China is investing in electric car batteries. France is investing heavily in creating electric car battery manufacturing for its French cars, while China has just invested $1.2 billion through BDY to expand its electric car battery production capacity, while you're seeing America also investing in electric car battery capacity. So there's geoeconomic competition instead of one streamlined geosynchronous based supply chain. So these things are changing. So this is why I think people are also exiting the global markets or the northern developed markets, simply because they're waiting to see how are these segments of the global markets going to do, especially in the new economy. How long is it going to last? And also, central bank policy is no longer going to stimulate these markets. There's going to be huge changes in these sectors of in these sectors of the global markets, because most of the time you had central banks just pumping in cash to make assets, to stimulate the purchase of financial assets on the market. But now what that's doing is that's actually switched around, because a lot more people are investing differently. So that, Vernon, breaks down what we're seeing in terms of that. That's a bit of the news roundup that we're seeing around the world. One, I did see the kwacha coming down. The stock market is starting to rebound as earnings season starts to pick up. We will be going through a few more of the results that come in, especially on Wednesday, which is Women's Day. But we'll be also going through some of the geo-economic results that we'll be looking at. The listed company results that will be coming out from that point. We will also be taking out some of the changes in government policy in terms of spending. Okay, this is actually and by the way, that's data that we showed, which shows you the declines in infrastructure spending and the continued declines in infrastructure spending. The most important thing that we want to try and get out is that they're going to be spending less money on infrastructure instead of spending more money, which inclines them to borrow less from the market. And therefore, if you're a bond investor who has your money and some skin in the game, you want to try and look at saying, let me snap up what I can now, because should the debts be negotiated, then we have an issue. Should the debts be negotiated, then we'll probably start to see yields coming down. So what I try and tell as many people is collect up as much of the fixed income market that you can now, which is holding these bonds that are sitting at about 20, 23%, all these yields that are sitting, giving you 18% return on investment now, so that your portfolio is packed with as much of them as possible. And then going forward, when yields come down, it's cushioned by these high interest rates. So buy up what you can now, so that going forward, when the rates start to come down, you can comfortably rotate into the stock market. When the bond rally starts, you start buying up stocks and you switch and transition there. But I think as a person, you should be talking about having a stock buying plan, but looking for assets which are underpriced. Which stocks are underpriced with strong growth expectations, with policy leaning towards them? Which ones are playing around that field? That's what you should be looking at. That is my job as a financial advisor. Okay, to give you that kind of advice. I don't know if I'm going to have Vernon back anytime soon, but now it's time to transition into our Mindset Monday conversation. And with Mindset Monday today, for everybody who's listening, I want everyone to think about today something quite interesting. I'm going to talk to you called the mental diet. There's an old saying that goes, you are what you eat. And that is effectively what, in terms of your physical diet. If you're going to eat healthy, you will be healthy. If you're going to eat unhealthy, you will be unhealthy. If you're going to eat poorly, your health will be poor. So your health outcomes are often dictated by what you eat. In fact, most people who train, whether you're being trained or not, most people who actually who put you on fitness diets and training will tell you that 80% of your fitness outcomes or your health outcomes come from what you eat. The other 20% comes from your workout. So you can pump yourself full of as much things, but what you're consuming is pretty much going to guide a lot of your actions. And I am here and today I want to just talk about it from the mental side. What are we consuming as people? Because this is Mindset Monday. What are we consuming as people at an individual level to prepare us for what we're going to be? Because I believe, and I'm going to hold to this, that even mentally and personally, you are what you eat. Okay, so as a person, you have to break down that part of being what you eat. And I believe that your diet sits in 4 areas. Your mental diet of what you're consuming mentally, what comes through your eyes and what comes through your ears mentally, feeds you in 4 ways. There are 4 types of things. So just like on a physical plate, you often see that it's broken into carbohydrates, it's broken into protein, and it's broken into vegetables. Okay, that's how people eat. They have that fruits and vegetable side of their diet, carbohydrates, protein. And I think if you break your mental diet down, you'll see it also the same. And here are the 4 components of a mental diet. Because whenever we're trained in marketing, we often say that any marketing material does one of 4 things, or a message does one of 4 things. It informs a person, it inspires a person, it improves a person, or it entertains a person. Okay, so these are like the 4 things that you're doing whenever you're communicating. You're either informing, you're either inspiring, you're either improving, or you're either entertaining. Whether you post something on social media, whether I'm speaking here to you as a person, whatever I'm doing, before I've been informing you, either I'm inspiring you, I'm improving you, based on the content that I'm giving you. That's what I want you to see. So look at what's coming through your eyes and your ears in terms of the minutes that you're spending every day, and ask yourself that question. I want someone to write that down in the comment section if you're following here, that your 4 components of your mental diet are informing, improving, inspiring, and entertaining. Now, I look at entertaining as a part that I think a lot of us, we overdo a lot. That is the junk food component of it, or the sugars. Now, it's good from time to time. It excites us the same way the taste of ice cream or sugar or deep fried food, processed food, the way that excites our tongue. It's flavor filled. But the question is, how much does it do for us in terms of building us? The same way we look at those kind of foods. Because most of the time, whenever you're having bad health outcomes, most doctors, nutritionists, or people will sit down with you and say, these are the parts of your diet that have to come down. And often what we find is we're often overdoing those parts. So we often have to have portion control, and that is time management of our lives. How are we actually managing our time in terms of that? And portion control simply means, how much time am I allocating to informing myself? How much time am I allocating? How much consumption am I having in terms of improving material? So informative material is, I'm giving you market data, data that's quite important for your financial decisions. So informing always is based on a decision. Somewhere along the line, there's a decision that needs to be made, and therefore you are feeding yourself with information specifically for that decision that needs to be made. Okay, so you're getting market data, maybe you're reading certain pieces of information, maybe you're gathering data from this area, but it's the gathering of data and compiling it together and in a nicely packaged way so that you can make a decision. So that's number 1 of your mental diet. The other part, the second part, is inspiration. Now, this is often linked to stories. Whenever you hear people who have been somewhere where you have, people who write their stories down, it's often a person who has done something similar to what you are attempting to do, or you are training your mind to do, and now you are using that person as a model of motivation for what you're doing. So whether it's a story that you're reading from a book, a documentary, anything, it has to be inspirational. Okay, in other words, it's triggering you to take action, and it's telling you that whatever barriers you're facing are not going to be as big for your life. The third part that we have to try and take a look at is not just the informative part, but it's also the improving part. This is where you are learning something. Maybe you're training yourself in a skill. You're reading a book about a specific skill. Maybe you're taking a course, you're practicing something. So this is where you're training your mind to improve at a specific ability, at a skill. So this is improving information. So this is improving mental consumption. And entertaining is what helps us laugh, helps us have joy. We have social moments. You can watch a movie, you can watch comedy, you can laugh at a comment, you can see a post. Anything can entertain you. Okay, now I know we try and blend up and try and infotain people a lot, but really what you have to start doing is learning how to separate it. And the way you count calories for your food, you need to count your time and energy spent in this kind of information, because what you consume mentally will settle in your heart. It'll settle in your mind. It'll actually affect the way you think. If you want to change how you are thinking, change what you are consuming. The same way that your body works, if you want to change how you are looking and how you're feeling in terms of your health, change what you're eating. Okay, you actually have to change your diet. That is the thing you have to look at. So look at this. Break down your day. I want everyone to actually, who's listening to this, to actually look at their calendar of their day and start to track how they're spending their time. Because I think the one thing we're the most frivolous with, I always tell people, budget your money, budget your money. But you know, one thing a lot of people don't budget is the time they spend. Okay, so I want someone to write this down. I know I always ask someone to write it down in the comment section because it sticks that way. Write it down. Budget your time. So in other words, look at your time at the beginning of every day and look at every 30 minutes. Break it down into 30-minute intervals and ask yourself, what are you going to be doing for those 30-minute intervals? And then try and stick to it. And then look at where the variance is in your budget. Where did you not do this? Where did you not do that? Where did you not spend your time doing that? So the same way we do budget analysis for money, you need to actually start doing that with your time and also looking at where you're consuming information. Now, the second part of your mental diet is using what you're consuming. So you can eat well as a person, okay? You can eat wonderfully, but if you're not using what you're eating, okay, if your body is not using the fat it's consuming, if your body is not using the protein, guess what? It goes to waste. So use what you consume. So also what's determining in you being able to improve your outcomes? One, you want to consume properly, but then you want to use what you consume because I think a trainer had actually brought this to me and said, food is fuel. If you look at food like putting fuel in your car moves on fuel. Your body moves on fuel. So even us as people, use what you consume. Okay, when you consume media, when you consume information, what decision are you going to put out of it? When you consume inspiration, what action do you need to take out of it? When you consume improvement, what skill are you actively working on that is going to work in terms of improving your financial outcomes or your focus or your work or something? How is this related to things? Because what a lot of people do, Vernon, and I'm going to point this out, is that people consume a lot of things they don't use. They spend their days operating in what I call the junk space. Okay? We often follow 15 politicians and they're going to say on this thing that's happened, this is my view, my view, my view. The question I often ask myself, why I stopped following a lot of those guys, is what am I going to do with what you're telling me? What exactly am I going to do with what you're telling me? If the answer is nothing, why am I paying attention to you? And even me, by the way, if I'm not telling you things that you can utilize, stop listening to me. Okay? Don't spend look, unless you're being entertained, but that's junk food. Eating entertainment all day, especially even on social media, online, YouTube, wherever, eating entertainment all day is akin to eating ice cream all day and expecting to be in shape and expecting to have good health outcomes. That's like going to a store and just buying all the junk food you can and sure you can enjoy it, but you're going to get sick. Okay, and this is what's happening to a lot of people. We are mentally rotting because we're in the media and information age, especially during digital times, and we're consuming a lot of things that are junk related. Okay, so you need to start looking at curating things like your timeline and making sure your mental diet is as strict as a physical diet. And if you can discipline your mental diet while disciplining your physical diet, your food diet, you often find that most of your life outcomes will probably start to improve with it. So that's just something I wanted to point out, Vernon, specifically on there. Now, when dealing with the online world, I want us to also just quickly touch on something I call signal versus noise, because you need to differentiate between what is signal and what is noise. I'm going to go back to that point I made earlier because I want to really help people try and clarify how to look at things. Because maybe to a lot of people, Vernon, I look cold-hearted. I look cold-blooded because I look at things at a numeric basis. I try and divorce emotion from things because I need to try and be clear when I'm making a decision. And I know that doesn't sit well with a lot of people, but unfortunately, that's how I'm wired, and that's how I do my job best. So here's an interview that was being had with former Trump administration advisor Steve Bannon. This is when Donald Trump was still president. And he was trying to advise a liberal host, which is Bill Maher, how to listen to Donald Trump and how to understand him. So here's a quick clip about it.
Mental plan of how he's turning around this economy. He's actually, I think you guys missed the point when you separate the signal from the noise. Watch the signal. There's a flashbang grenade every day as far as the noise goes, right? But just watch the signal. He's very consistent.
So I wanted to break that down very quickly, what he said. And it's actually that comes from a book by Nate Silver. Nate Silver is a what's it, campaign prediction analyst. He does a lot of data for aggregating polls. And he wrote a book called Signal versus Noise: The Science of Prediction. And what he tried to say is you must make sure you focus as much as you can, less on less on noise and more on signal. So signal, Vernon, and I think this is where a lot of people will struggle, how to listen, how to differentiate a signal from noise. A signal is a consistent pattern that has a meaning attached to it. Okay. So when you're seeing information being piled up to you, you must differentiate from what is noise. Noise is scattered, it's all over the place, and you cannot establish a pattern or meaning from it. Signal is where there is a consistent tone, something, there's a direction being established, and it is communicating something to you. Okay. And something that you can then do something with. And if you separate noise from signal, and this is why you separate pronouncements and things like that from policy. Policy is signal. When is policy being put into practice? That's signal. So let's go back to this example. A lot of people say things. A lot of people promise things. Politicians inside the government promise all sorts of things. Politicians outside oppose all sorts of things. And they all keep going after each other. But what am I looking for? I'm looking for actual signals of policy. Where is policy being put into practice? Now, if I see 3 years of data that show me infrastructure spending is coming down, a government that has consistently pronounced that they want to start bringing costs down, that is a signal. Okay, it's telling me something. Whenever I throw a sign at you, Vernon, whether it's a gang sign or anything or a wave, that is a signal that is telling you something and signaling for you to respond in a specific way. So, what other things you can respond to? Focus on that. Forget the noise. Noise is what distracts you from the signal. Okay, if you focus on noise, that's emotion. And here's the funny thing about noise, Vernon. If somebody makes a sudden noise like that, it makes you jump. It makes you react. Okay? Sudden noises make you react. Signals make you respond. Because when I give you a signal, when I give you a sign, you think about it. Like if I wave at you, be like, is Mnyumba waving at me? Oh, cool. Let me wave back. That's a thought through action. If I just scream in your ear randomly from nowhere, you'll jump and you'll scatter. That's a reaction. So there's a response and there's a reaction. The difference is the response is calculated. It's thought through. It's methodical. Okay, and it's logical. So what most of you have to start doing, especially with market information, and while you're in the social media age where you're being pumped full of information, where postings are happening every second, trillions of things are coming at you, images, shares, posts, like all these things are coming. Separate the signal from the noise. That is where your decision making comes. That is a skill you need to try and learn. And I want someone to write that down. And I know I get it again. Write it down. Separate the signal from the noise. That is the one thing. If you're going to take anything from there, it's budget your time, portion control your information, and separate the signal from the noise. That is the mindset. That'll turn us a lot into how the Chinese are. So when you're dealing with the Chinese in this country, they separate signal from noise. Okay, you can say all sorts of stuff to them, but they come here, they look for policy, and they act on it. And it's almost very cold-blooded, but I can tell you that they get a lot right with it. And if you want to join that kind of echelon of people, you have to learn to do the same thing. Otherwise, poverty, my friend, are the people who listen to noise. Rich, wealthy people listen to signals. That's the difference. I'll leave that there. I think you've muted yourself, Vernon, but anyway, you're still on mute, my brother. Right. So thank you very much. I think we're out today. Have a good day, my man.